Hi, warm welcome to everyone to another exciting CRO Expert Hour brought to you by MICCI. Hello there, I am Sean Chia, the Executive Director of the Malaysian International Chamber of Commerce and Industry, the longest established chamber in Malaysia, championing businesses since 1837. We are more than 180 years old. Are we tired? No, we keep our members up to date. And as part of our services, we bring you knowledge and sharing with our members. Right, before we start our webinar, we would have some housekeeping rules. Those that are on Facebook, if you want to ask any questions, put it into the comment section, and then we will try to answer them as much as we can. Those that are in the Zoom, there's a chat box below, and post your questions down there. Right, without further ado, today's topic is prepare and open up your IPO with digitalization. Now, what will you get as a takeaway today is to leverage on digitalization to enhance your IPO prospects. Now, IPO is a major milestone in a corporate's life. You have the funding, you have the access to a larger audience, you get noticed. So it is not all about purely financial and funding of expansion of lines. You can actually have a lot of other doors open for you, other doors of opportunities open to you. And some of the things that you might want to consider are strategies in digitalizing, using the funds from the IPO to digitalize and expand your marketing channels, develop intellectual property, and improve efficiency of your business processes, which at the end of the day would be profitability. So without further, in this live Zoom webinar, we have with us today Associate Advisor, Technologist Fong Yit Meng. He holds a Bachelor of Information Technology from the Multimedia University, and he's also a talent expert network panel on MDEC. He advises companies in the areas of IT and digital technology to help grow businesses in this digital-driven economy. So, Mr. Fong Yit Meng, you ready?
Hi, Sean. Thank you very much for having me here. I'm always
All right,
ready.
Yit Meng, over to you.
Thank you. Good afternoon, everyone. And first of all, thank you for having me here to talk about prepare and open up your IPO with digitalization. So I'm sharing my screen. I hope you can see my screen now. All right, so let us start by going through the slide. So this is me. My name is Technologist Fong Yit Meng. You can also call me Mike Fong. I'm Associate Advisor for CRON Malaysia. So today we are going to talk about a few topics. We'll go through the fundamental of IPO and valuation. Then we'll talk about the fundamental of business model. And then we'll have some case study, and we will end our session with a Q&A session. First of all, a lot of us here are because of this IPO topic. Let's start with the fundamental of IPO and valuation. So how do analysts and companies how the analysts value a company? So in IPO valuation, there are a few considerations. We'll break it into 4 types. The first type is what we call a quantitative consideration, which means that things that we can quantify. So in a company, what can we quantify? The revenue, the profit, and the assets of the company. Then we go into the qualitative part of a company. So what do we call qualitative? It is the quality of the company. Quality in this term means the key management. Who are the key management? Who are the core team members? Who's the director and who's running the show? What are their backgrounds? Do they have the sufficient knowledge? Do they have the capacity to lead the company? Then we move to brand value. Every company will have a brand value given by their customers. So for a company to get valued, most of the time we'll look at how much this company values to the customer. In another word, how much people are willing to pay for the premium for this company's product. For example, Apple has a very strong brand value when it comes to smartphone and it comes to their products. So this is the brand value that we measure the quality of the company. And the third most important quality is the proprietary technology. In a typical business or business setup, it's either we are the maker, or maker means we are the manufacturer, or we hold certain proprietary technology that we know and our competitors do not know. So this creates new value to our company. Okay. In another word, the retail investor, the investor will not want to invest in the company that has no competitive advantage, right? So that's why who's running the show, the key management, the brand value, how the market perceives this company, and the proprietary technology, what this company is doing better than the competitors. These are the three key considerations that we use. Then when it comes to the business side of the organization or the company that we want to go for IPO, analysts normally will look into the business model. So is it a conventional business? Is it a business that has a strong demand and a strong presence? Well, these business models are basically what analysts will take into considerations. The second important is the future earnings, because why we invest in the company? We want to be part of the future of the company. We want to capitalize on the future earnings. So future earnings is very, very important. A simple example will be if I run a company and my company is selling typewriter, probably nobody wants to invest in my company because nobody sees the future. The third point is the competitive advantage. Investors want to buy a company that has competitive advantage. That's how the investor get a sense of security and guarantee that they are going to make profit in the future. And last but not least, corporate governance. Corporate governance is a very big topic recently, especially when a lot of investors, especially the foreign investors, they look into environmental sustainability and also the governance, because we want to invest in a company that has good governance, that really have the procedures well designed, really monitor and make sure that the company is operating in a very efficient and very responsible way. This ensures the longevity of the company. This ensures that whatever the company is doing is going to have a more sustainable future. So we can see that there's a huge shift of investor investing in companies with good governance, where they have very proper documentation, the information flows are very, very well designed. The fourth consideration, the fourth main important consideration is the market. The market that the company is in. So how do we value market or quantify a market? First of all, it is the customer base. If we were to invest in a company, we want a company that has a broad customer base, where they have a lot of good customers buying from them. Nobody wants to buy a company that only sell to a few customers, right? Unless or except the case that they are very specialized industries. Okay. Then the second consideration, market share. This is especially true when we talk about the technology companies, the retail related or the consumer related companies, because we want to invest in the big players, the company that has a huge or significant command on market share. That's how we make sure that the company will continue to make money and continue to earn. Third point that I list out is the industry growth. So going back to our typewriter company that I mentioned earlier, investor wants to make sure that the market is continuously growing. So for example, if we compare a electric vehicle industry versus a conventional car, okay, the petrol car, we can see that the industry growth for these electric vehicles are growing up. So this is a very good indicator that the company is in the right industry, that in the next 5 or 10 or 20 years, the share price will continue to soar. And this is what investors really like to look into. And the fourth item that I list down is actually the business cycle. Okay, we found that a lot of investors, they are looking into companies that has a healthy business cycle, and the cycle is not what we call a project-based business. Why? Because when it is project-based, it is more skewed towards the unpredictable side, where there are a lot of risks and uncertainties. In this current volatile and unpredictable world, investors tend to look into companies that are having a more predictable business model. For example, telcos with good customer base, with huge market share, and they are investing in 5Gs, and their business cycles are built every month. These are the good companies. These are some of the good companies that we are talking about. If we compare it to a company with little customer base, little market share, and in an industry that might be neither here nor there or sunset industry, and the business cycle is project-based, these are companies that investors tends to shy away from. So next, we are going to talk about the fundamental of business model and why is it important for us. Okay, in a typical business organization, we have three main components: the people, the process, the technology. The people means who's doing, who's working on it. Let it be the management, let it be the executive. We want to know who's running it, how many people are running it. Are they qualified? Are they skillful enough? The second component of a business organization is the process. What are we doing or how things get done? Okay, in a typical manufacturing company, you will have processes like product development, purchasing, production, warehouse, and up to logistic and delivery. So these are processes, how things get done. The third component is the technology. Technology in this sense doesn't mean that we want sophisticated technology. We are referring to technology that are aligned to your business goals, that are aligned to your industry. For example, if you're a manufacturing company, are you using conveyor belt like what we have in the photo? Or you are still relying on manual labor to push the trolley to transfer parts from part A to from section A to section B. So these are the technologies that we are looking at. Another perspective is when it comes to data entry, do we use paper and pens, or do we use Excel files, or do we use certain applications or software? So these are the technology that supports the business. Why technology is important? Because technology is the tool that we use to allow the people to complete their tasks. The more efficient the technology is, the more productive the process are. And this translates to a higher earnings or higher income or both for the company. So I have to highlight that technology doesn't mean that we want the most advanced or sophisticated or the state of the art. That is technology's point of view. But in business point of view, what we want is technology that supports our goal. So I'll move to the next slide. We are going to talk about business model. So the fundamental of business model is this. From my left-hand side, the operation, production, and cost. The middle is our company. The right side is our customer relationship, sales channels, revenue streams. So in a typical business model, we move from left to right, where we have operations such as administration, finance, okay, HR, etc. We have our production team to research on product, develop the product, produce the product, warehousing, etc. And then we have our cost structure. So how do we read this chart? We look at the 6 main components in a business model, okay? Because it tells us a lot about the company. For example, if a company is product driven, the left-hand side, the operation, the production, that is the critical part because it pushes your product to the market and that's how you drive sales. For retail related or consumer related industry, they are more right-hand driven, where customer relationship is more important. How do you engage with your customer? How do you do your marketing on social media or through face-to-face or through webinars like this? These are the customer relationship that impact or drive sales. And then we look at the sales channels, for especially true for retail industry. Retail industry, the more channels you have, the more sales you will get. If you have outlet in shopping malls, that's one channel. If you have kiosks or franchises, then that's the second sales channel. If you have digital marketing, think about it. Can you sell your products through online? Okay, that is the third sales channel. So in another word, the more sales channel that are well managed, the more sales we can generate and the more profit, technically, the more profit we get. And then revenue stream is something that I want to highlight in today's webinar. Revenue streams refer to where the money comes from. Okay, is it project based or is it per transaction based? Transaction based refers to this scenario. I am the producer. I produce some goods. I put it in my warehouse. I transfer it to my outlet. And then from my outlet, I sell it when customer walks in. So that's transaction-based. A project-based revenue stream is where we have a pre-agreed commitment. I will complete this task. I'll deliver this project to you and we pay according to stages. So on the outer side of this slide, you will see that there are items in yellow color box. So these are the areas or the technologies that can help your different component in your company. For example, if you want to improve on your operation, we can use BPA. BPA refers to business process automation, which means that it can be either hardware or software or combination of both that helps to automate your business process. For example, if we have manual form filling, we fill form manually, and then we need to manually key into Microsoft Excel and we manually convert it to chart. So these are business processes. BPA can help you with data acquisition. That's what the technical term we call it, which means that you can imagine it's a tablet or it's a mobile phone. We just punch in a few things, a few items, and then it automatically converted into a spreadsheet and into a report. So this is what we call business process automation. For production, IR 4.0, I think most of us here know what's IR 4.0, which means that the machines are equipped with sensors, data loggers, etc., so that it can communicate and send data in and out. On the right-hand side, customer relationship chatbot is a very powerful tool for company to improve on customer relationship. What chatbot do is chatbot can understand conversations. Imagine this: your client send you a message over WhatsApp or over let's say social media like Facebook or Instagram, and the chatbot will actually pick up the message. From the message, the chatbot will be able to determine, is this a complaint or is this an inquiry? If it's an inquiry, the chatbot will prompt the next step, okay, asking for more information or providing information to the client. So this will be able to help us to improve customer relationship. The logic is very simple. When client wants something, they want it yesterday. So when clients send us messages, they're expecting us to reply or respond immediately. This is the pace of today's world. If we were to hire someone to stand by 24/7 to reply to messages, that is a cost to us. But if we deploy chatbots, the first layer, the first point of contact with client get attended by the chatbot. And the chatbot, for example, if unable to help the client, can actually prompt to the user and tell them, okay, we are going to attend your case in the next 24 hours. So this will give customer satisfaction that they get entertained, although their problem might not be fully solved, but the client, will get the first tier of customer service. Digital marketing on the right middle, okay, digital marketing is one of a very good way to increase our sales channel. We can see that Facebook, Instagram, social media like TikTok or Twitter, they are beginning to have a lot of tractions where they can generate our sales, especially referring to consumer-based or retail-based customers, companies. So digital marketing can help the company to increase their visibility. More people will get to know you. Then it can help us to increase sales channel. Okay, imagine if your product can be placed online via, let's say, Shopee, Lazada, that is one additional sales channel. If your customer can place order via WhatsApp, Instagram, or Facebook, then that's another sales channel. For manufacturers, Alibaba is one of a very good digital marketing channel that helps you to grow your business. It allows us to go beyond Malaysia market into other countries. So this is a sharing about my clients' feedback. A lot of the time they are said it might not be effective because we generate a lot of leads. So I'm gonna tell you in a later why this is important. And last, we are going into the digital business part where we are going to talk about how we develop new revenue streams. So this is basically what we call a customer lifetime value. The profitability of a company depends on the average sales value multiplied by the annual transactions, how many times the client buys from you. And then the retention period, how long your customer will continue to buy from you. And of course, multiply by your profit margin. So this simple formula will tell us how much money this company can make. So for example, if average 100 ringgit sales multiplied by 12 times, multiplied by, let's say, 2 purchases per year, multiplied by retention of 5 years, multiplied by profit margin of 10, we will see that, okay, this company has this amount. And if we are able to increase one of these component, like let's say increase our sales value from 100 to 200, then what we will be able to achieve is we will have a significant increase in our profit and turnover. Okay, so I will then go into this recurring revenue model that I want to introduce. We talk about revenue stream. So ask ourselves, how is our customer lifetime value? If we do the maths now, we'll understand that the retention period and the annual transactions are very important element, because when you have a client, you want them to buy from you for 5 or 10 years. This is very important for business future earnings and future income. So I want to introduce you to a recurring revenue model. How does a recurring revenue model works? Okay, try to challenge yourself and your team. If your business is transaction based, where customer walks in, make an order, and then you will have to wait for them to repeat their order. Okay, that is a transactional base. Can we challenge our company and we reinvent a new business model called recurring revenue model? There are 4 main types of recurring model that we can use. The first type on our upper left is the service charge over specific period. This is what normally you call the maintenance contract. If you buy something from me, I will service your machine or your machine for the next 3 years. Is this something that you can offer to your client? If yes, then congratulations, you have just increased your customer lifetime value, because the customer will stay with you for another 3 years, okay, giving you extra income. The second type on our left-hand bottom, that's where we call the recurring purchase for perpetual use. It might be a little bit mouthful, but what it means is, if any one of you here are using Amazon Prime, you'll notice that when you're in Amazon Prime, you are using their platform. And if you want more products or more items, more movies, you have to continuously buying from them. A lot of the game companies use this model. It's very, very efficient. Your client goes in, play or use certain tools to buy certain tools, and then they continue to upgrade their digital goods, their digital avatar. So this is a model that we can consider, because it gives us a very long customer retention period. On our right hand top, that is where we are all quite familiar with. The per user billing is something like a software subscription like Microsoft 365 or Zoom, okay, where we pay one user, we are going to charge X amount of money for 1 year, okay. So ask our company, can we have this kind of business model? Because this will increase our retention period, and also it will be able to make our business more predictable. We have a more predictable earnings, we have more predictable cash flows. And then on the lower right, that's what we call a freemium. Freemium revenue model works like this. Imagine Google Drive. You are given 15 GB for free. The moment you register, you get 15 GB. Use it, okay? Full feature, Google Drive, use it for free. But if you want more, then that's where the premium comes in, and then you have to start paying. So of course, when we are doing the paying part, we can use per user billing. Okay, we can use a combination of different tiered or different billing system or billing model. So this is what a freemium business model works. So then we come back to this customer lifetime value. We know that when it comes to IPO and valuation, what is important for us is our profit, our revenue, and our asset. So asset is not involved in a business model for now. So what we want to do is we want to increase our sales, our revenue. So we need to really look into the number of retention period and the annual transaction, and how we can increase our average sales value. That's how we increase our earnings. That's our revenue. And from there, if we can increase, for example, 2 or 5% from on our profit margin, then we have extra 2 to 5% profit margin. When we translate it to a company's valuation, multiply by, let's say, 15 or 20 times PE, this company, a little bit of increase in your average sales value, a little bit increase on your annual transaction, and a little bit of increase in your retention period will drive your valuation higher a lot times. So I hope you can understand why customer lifetime value is something that we really need to look into, and that also ensures that we have future earnings. So now I'll get into a case study about business and digital. Okay, how digitization improves customer satisfaction. I will use AirAsia and COVID for the purpose of this discussion. Okay, in 2020 March, COVID hits Malaysia and the country went into full lockdown. The first company that got terribly hit was AirAsia. The reason is very simple, because their flight they cannot fly. They all got grounded. So what is the first immediate thing or crisis that they encounter? All their customers, pre-booked ticket customers, starts calling in asking for refund, asking to inquire about how AirAsia is gonna respond to them. So we can see that on our right-hand side, in 2019, okay, AirAsia is handling 23 million queries, which means that calls or messages, direct messages. But in 2020, the figure rocketed to 44 million. Is like almost double up the amount of queries. This is mainly and due to COVID. And then at their peak, we can see that there are over 550,000 requests per day. Imagine an airliner customer service department has to attend to 550,000 requests per day. So how do they solve this? So what AirAsia did was they leveraged on AIs and chatbots where they deploy, because AirAsia is quite digital, their digital infrastructure, which means that the adoption of technology is quite high. So they leverage on AI and chatbots to help to route the calls, to attend the calls. When customers send messages, the chatbot will filter out, will be the front line to defend, where the chatbot will start replying to the customers. How can I help you? These are the FAQ, these are the problems, these are the solutions, these are our announcements, etc., etc. Okay, AI is used to help to route the right chatbots or the right messages to the client. So AI is also used to understand what the client actually wants, because almost everybody can refer to the same thing using different languages or different grammars, and the AI is deployed just to understand this. In AI, we call this natural language processing. And the fourth point, there are more than 1,800 staff volunteer to assist contact center during the peak, pandemic peak. So why is this important? Imagine when you are a company and your customer service got double the call volume. We need to quickly put people into these positions to start answering. So the speed to train the staff, the speed to deploy the staff, and the speed to manage this group of new staff, temporary staff, by the way, is very critical. So that's why when we invest on IT, we have this thing called scalability. We can increase the call center to allow another 1,800 staff to join in this department. At the same time, after the pandemic ends, we quickly shrink it down. Okay, so this is the importance of having OPEX versus investing in OPEX more than CAPEX. Because if we invest on CAPEX, when the call volume goes down, chances are we are stuck with the investment. So this is why a lot of company starts to look into investing in OPEX rather than CAPEX because of scalability. We can increase or scale up whenever required, and we scale down when the demand gets reduced. So now we talk about the performance. Okay, there's this net promoter score where when we are filling survey form, a lot of the time they will ask, will you recommend our service to your friend? For example, if you encounter this kind of questions, basically what the survey wants to do is to understand whether you like their service and will you promote it to your friends and family. So we can see that in 2019, the net promoter score, okay, a total of 100, over 100, they only scored 38. But during 2020, during the pandemic hit, instead of we expect the net promoter score will go down, it actually goes up. Okay, so the conclusion is because they deployed the right technology to support the right department. Okay, even when the call volume doubles up, the net promoter score, people likes their service even more. Okay, and then the customer satisfaction, my final point, the customer satisfaction and the first contact resolution surveys were above 90%, which is very good, which means that we can see that how digitization improve your customer service satisfaction. Of course, some companies ask, if we do not have such huge volume, is it still required? Well, my answer is we get what we call an architect, soft solution architect, to go into your company to understand the gap, the technology gap and the needs. Then you start to invest. Then you start to make decision whether you should invest or you should not invest. So next, I want to talk about digitizations and how it helps to do precision decision making. So during the pandemic, well, by the way, pandemic is a very good acid test to see which company are able to scale fast and good. So in this during the pandemic, Foodpanda have surged in their orders, and they decided to open their Panda Mart, which means that they want to have strategic points where they put all the groceries or items in this mart, and it helps their riders to quickly pick up the frequently ordered items from the strategic location instead from each and every merchant they call. So in 16 months, they have successfully opened 150 marts in 16 months, okay, in 40 cities across 8 markets in Asia. They are able, because of this Panda Mart placed in a very strategic location, they're able to ship 4,000 groceries within 25 minutes. So this actually the amount of data required and the speed of processing this data for the management or the directors to make decision. This is a very good example on how digitization gives you the data that you want, the huge amount of data processed into information to help decision making. And the second thing is the speed of collecting and compiling these data. The third case study that I would like to show is this digitization drives revenue growth and market share. So I'm using Domino's Pizza. In Domino's Pizza history, if you look at the chart on the left hand side, so their share price is $386 as of, I think, yesterday or the day before. Okay, yeah, and if you look at the peak, they peak at 545 USD. That was in December. So the digitization journey starts somewhere around 2013. You can actually see that from 2013 onwards, their share price keeps soaring up, okay, at a very, very high rate. Because for Domino's, they are not a pizza company, they are a digital company. They allow you to order online, order through phone, and then the order gets passed to their store and the delivery got tracked. So these are basically the supporting role of digital and technologies. It is not like rocket science where it's so complicated. It is a well-aligned digital technology, so use of softwares and hardwares to support business operation. So on the right hand side, you can see that if we compare the largest pizza company, Pizza Hut versus Domino's revenue growth, we can see that Pizza Hut, the blue line, is actually having plus minus 1% of growth. Okay, but Domino from 2015 to 2018, the growth are double digits. So this also highlights the importance of digitization, the right use of hardware, softwares, and technologies to help companies to drive revenues and increase market share. And why these two components are important? Because when we value a company, we value the revenue that they are doing. We value the market share that they capture, and also we look at the growth rate. Okay, a very simple question. Do you want to invest in Pizza Hut or in Domino's? After looking at this chart, probably invest in Domino's because we can see positive and strong growth. So I also add in a note, a news. Domino's is already taking 50% of pizza delivery market, okay, leaving Pizza Hut 29% and Papa John's 21%. So this advantage, this competitive advantage is because Domino Pizza invests very, very much heavily in their IT, in their technology, and to enable them to capture market share and drive revenue growth. Okay, Martrade and Google last year, they partnered and they want to help SMEs to increase sales channel. So what they did was, Martrade, because of the pandemic, we cannot travel. So what Martrade did was they partnered with Google. They help SME to improve on their digitization, website, paid ads, etc., so that companies can still have visibility and presence online, where the rest of the world will be able to find our products, find our companies online. This is one of my favorite example, Amazon e-commerce and Amazon Web Services. A lot of people know Amazon for their e-commerce platform where you can basically buy everything. What is making Amazon so special is Amazon developed their platform, okay, the system or their e-commerce platform, and then they how the right word should be, they then lease or rent this software component to other companies. Okay, so imagine this: instead of we invest on capex to build a software for our own use, we invest on this software, we put in money, we invest in this software, and then this software we sell it or we rent it to some other people. This is a very good strategy where we turn our cost center, IT department, into a profit center. And the payoff is really, really huge. We can look at the comparison. Okay. Year ending, these are the news from the, I think there's a typo, it's 2020. So in year 2021, Amazon's business is, they managed to get 469 billion in sales. In 2020, it is 386 billion in sales. Profit margin is about 7% in 2021 and 5% in 2020. But when it comes to the web service, their IT department, initially a cost center, now it is a profit center. It generates 62 billion in sales with 18.5 billion profit, giving them a very good 30% margin. Same goes to 2020. We have Amazon Web Service, we call it AWS, generated 45 billion in sales and 13 billion in profit, which is still a comfortable 30% margin. And this has been the trend for the past 5 years. Okay, consistently 30% profit margin, and the growth rate, if you look at the last column, annual growth rate for the web service is actually about 50% higher than the e-commerce. So what can we learn from this example? We should look at IT or digitization as an opportunity to enable new business rather than it is a cost to invest in our company. Because we know our industry better. We know the right technology to adopt. Okay, so I hope this inspire you and give you some idea that maybe one day we can offer new business to our customer, and this is the new revenue stream that we are talking about. Okay, moving forward, there's coming back to AirAsia again, simply because in Malaysia, AirAsia is one of the well-known company with very good digital case study. So we can see that what AirAsia did in 2021, okay, AirAsia has a lot of customer data, okay. Although they are an airliner, but they have a lot of customers' data, customers' behavior, who bought which ticket, flew to which country, etc., etc. Okay, so during the pandemic, when cash is very low, AirAsia targets to decouple their digital part, the digital part of their business, and to raise fund via listing. So that's one way of decoupling your digital business to generate new to get new funding. On the right, what Asia did was since they are very good with digital marketing, they are very good with digital, they opened a academy named Redbit. So they provide upskilling courses. They teach you how to do digital marketing, etc. and etc. So I hope this gives you an idea that investing in digital is not a straightforward cost to the company. It opens up new business model, it opens up new revenue stream, and it actually is a very strong leverage on your existing customer base and also a very strong leverage on your know-how in your industry. Another very good example is Sen Heng. Sen Heng is a company in Malaysia selling electrical appliances. So during the pandemic, Sen Heng started and pivoted into a new business. They call it SH Retail Academy. So what SH Retail Academy did was they are promoting two main products. First is the training, how to build a business like Sen Heng. So this is a training service. Then they provide the software that Sen Heng use to manage their inventories and to manage customer service. Okay, because Sen Heng have very good customer service. We know that they are very good with upselling. Upselling means when I buy a washing machine, Sen Heng's staff will tell us, hey, why don't you buy another insurance, extended warranties, etc., etc. So these are upselling. So Sen Heng are doing very well in this area. So what they did was they start their own academy, training people how to do this business of upselling, retail business. And then at the same time, they are selling the softwares that they developed to the consumer. So this is another very, very good example to show how we convert digitization from a cost center into a profit center that has direct impact to your new revenue stream, your sales channel, and your income, and also your profitability. This is me in the photo. This is also what I did for this company called CRON Technology Sdn Bhd. What CRON did was the client supplies a lot of machineries to a lot of the industries and government agencies. And then we identified that they have so many machineries out there in the market, and they have their maintenance team, maintenance contracts. Okay, so the first revenue model that we adopt is the maintenance contract. So we have maintenance contract to service the machines. And then this company, engineering company, they need a software to keep track of the maintenance contract. So that's when we built a maintenance management system for the company. And from there, we sell this software to the clients, because imagine a factory probably have machinery vendors for let's say 5 or 10 vendors. So I am one of the 5 vendors that service the machinery. So instead of I use the software for myself, I open it up for other vendors to use. So this helps the company to pivot into a new business. Selling software is subscription based per user billing. That's what we did. It successfully increased the profitability of the company. First of all, the software get fully paid by our new customer. And then secondly, we are able to capture new markets and enter into a new industry. So this is a real case study that I've done for them. This photo was taken from YouTube, okay, where we talk about the CRON, the software. So what I want to share with you is, it is time for us to look into digitization. It is more than more than just Excel. It's just more than reporting. It's just more than optimizing your production. It can be your next superstar, like what Amazon did. 30% margin, over 30% growth per annum. So with that, I will end my topic today, and let's open up for a question and answer Q&A session. I'll stop my sharing and pass back to you, Sean.
Yes. Hi. Thank you, Yit Ming. Quite correct. Even MICCI itself, if you noticed this side, it's founded in 1837. We are more than 180 years old, and yet over the last 3 years, I have actively digitalized and modernized the way we do things. Some of the things that we have done is to, at least the accounting system, we have just gone into the cloud, so that the access to it is 24/7 and throughout, because we have branches all over the country, so the staff can access it, real life. Other than that, we've like contactless payment. We are digitalizing a lot of the processes where, there used to be wet ink that you need to fill up forms and stuff like that. So we're trying to migrate into things where you do not need solar. Talking about, for maybe people to understand a bit more about, say, something like the BPA, the back office processing automation, right? The case studies, I used to do this too, and I give an example of an agency that resells a product for a principal, right? And they get a commission from that. And so what they do is they have a lot of the outlets throughout the whole country, and then they submit their reports to HQ, and then HQ has got like 30 key punch operators punching in that the sales figures and the commission claims to the principal's system, so that they can claim the commission. and there's errors, and it takes about 2 weeks before the commission gets locked into the system. So for this case, they use the BPA, right? The automation is a robot. It's not a mechanical robot, but more like a software robot.
Software robot, yeah.
Where it automatically opens up the sales report files from all the outlets, takes the figures, rekeys it into the principal's system automatically, without intervention, without people, and it works 24 hours every day without fail. So it just speeds up from a 2-week to 1 day, the commission. So
wow.
Yeah, so it means that a business can get their revenues faster and more accurate. So that's a real life case that you can look at.
Wow. Awesome.
Base IR 4.0. Okay, this has been touted quite a lot, there are certain cases. It's not that a lot of the industry in Malaysia is not using IR 4.0. They're actually using some form of IR 4.0 automation already. Yeah. And you mentioned something called recurring income. Now,
yeah.
You're right. You mentioned something called maintenance. Now, this is again a real life things that I've done for my clients in those days. That a lot of companies keep their focus on chasing new sales, but they forgot about the maintenance, right? The maintenance is a recurring. It's not even low hanging fruits. It's already
in your mouth.
Right? So if you're not taking care of that and getting it invoice bill in a timely manner, you're losing money. So that's what I did for this time, was to, like you say, you're quite right. It is putting a system to track. So this is due when you're supposed to collect, and etc. And then that sort of like gives you the basic. Okay. And that's something you shouldn't forget. Yeah. Okay, let's look at any questions that come in here. Oh, this is a good question about relating between IPO. What's the criteria for IPO for an IT company? Okay, I guess in an IT company, the rules are still, if you're listing in Malaysia, it's still under SC.
Yes.
I guess what maybe the question is, they're probably looking at things like Grab and people like that, the technology ones where they don't actually make money, but people they can still list the company and people still invest. What is the trick? Yip Ming?
Yeah. Okay. For a company to be listed in Malaysia, we still look at what we call a profit-based valuation, which means that we value a company based on profit. Okay, it's not the sales. It doesn't really. There are some minimum criteria of how much sales, because that normally translate to your profit. But what is important is actually how much your profit is, and then that's when we want profitable companies to be listed, especially in the main market. For its market, there is no hard written rules on profitability, which means that even if you are not profit making, if you are not making any profit, zero profit or negative profit, you can still list. But normally it doesn't justify the cost, because the valuation of a company is a number multiplied by your profit, your earnings. Okay, so if you have a very low profit, basically the valuation is lower, and it's lower, it doesn't justify the amount of work done. So for Malaysia, there are no distinction between the industry, whether you are selling chicken and eggs, you are retail manufacturing, or a IT company. The same rules apply. It is still profit based. Okay. And then people start asking about Grab. Okay, what Grab did was, it is not a direct, straightforward new listing. They list under a mechanism called SPAC. So it's like a public listed company take over Grab and then rename the buyer to Grab, something like this. Okay, so it's different method, they still get listed anyway, but it is what we call a backdoor listing, where they don't really go through the normal process of evaluating the profit.
Right.
So if our company, for example, if a normal even IT company want to go listed, the direct, straightforward way, we still need to go through the same process. There's basically no distinction, no difference at all.
We had a another session under the Crow Expert Hour in terms of valuation. And one of those things that can be value rather than dollar and cents or profitability is intangible, like the monopoly, the data, the network that it has. For example, AirAsia has this huge amount of data on who's traveling, what they're buying, and something that they leverage on. I guess that's also one way of valuing a company. Okay,
of course.
that's the next one.
Yeah, right.
Okay.
You're right.
Going. All right, the next one, that's this is where this whole entire webinar was supposed to be. He said that how does the digitalization help in the process of IPO besides optimizing the operational processes? I mean, when you are applying for listing, how would your digitalization transformation help in the IPO?
There are basically two main areas that digital can help. First is when it comes to documentation and management. If a digitalized company, basically you have more access to information and data, where this is very helpful for your advisors to look into the details that can increase your valuation. For example, you mentioned about the customer base, right? The market share, etc. So if we have more information, we can provide this information to our advisors. The advisors will be able to draft a better story to project the higher future earnings. So this will indirectly increase your valuation.
Yeah.
This is one way that it can help. The second is if you digitize your company, like what I mentioned earlier, you adopt digital marketing, you have more sales channel, you are able to export to China and rest of the world through Alibaba. That is actually a really solid sales figure and really solid profitability. At the same time, if the use of technology, like what you mentioned earlier, okay, for example, the maintenance management system, if we develop, we adopt and we develop it ourselves, it is a cost to us. But if we sell the software, it is extra revenue for us. So first of all, we offset our capex on the software and IT. Secondly, we get additional revenue stream. So this will be able to translate to your valuation. Another interesting example will be the Kowe and Kuku. Remember these water machines, right? That cost like 3,000 or 5,000 ringgit. It worth 60 ringgit per month only, and people buying like hotcakes. So if you do the maths, right, 60 ringgit multiplied by 12 months by 7 years, multiplied by thousands and 10,000s of consumer, this is a very good company that I want to invest in. So the next time if someone tells me that they are a manufacturer of a water purifier machine and they sell per unit basis, if that is their business model, chances are I don't want to invest in it. So this is how digitization enables new business, and it helps to drive value, and it helps to give a better future prospect to our investor. I hope this helps. Yeah.
I guess, yeah. In a nutshell, digitalization, if you embark on it and it's part of your IPO listing, and that's your storyboard, so to speak. The first one is optimization of cost law. I mean, if you are digitalizing, then it gives the impression that the cost and efficiency of your business is optimized. Secondly, is like what you say, there's a channel for revenues, faster revenues, more agile, more opportunities that you can do with being digitalized. digitalize, right?
Yeah.
Which then flows on the next question is exactly what it is probably answered in the second question was, how does digitalizing the operation process benefit the IPO journey?
Well, one of the biggest component of IPO journey is actually on the value of the company. We want higher valuation. We want to drive higher valuation, and it goes back to the 4 criteria: the quantitative criteria, profit and sales, profit, sales, and asset. The qualitative, the brand, the key management, and how you manage. The third component is the business model, the governance. Is this company well governed? Is this company well managed? Okay, what are their business models? Are they using, like, in the example of water purifier machine, water purifier, do they sell piece by piece, or do they have a long-term prospect of the next 7 years? We are very sure that we will get this X amount of money, right? And the fourth component is the market. Market means how the consumer look at it, look at the company, like the market share, the customer base. Imagine if I were to sell 10,000 units of water machine, how much effort do I need to put? But if I use the subscription model, okay, 60 ringgit per month, I can easily acquire 10,000 subscribers. This gives us a very huge jump in terms of sales and long-term earnings and sustainability. So this is how digitization helps in terms of the valuation, because at the end of the day, valuation, IPO, the biggest chunk of IPO is still on the value of the company itself.
Yeah, I guess it's a word that I want to call use here is called revenue assurance, right? It's revenue assurance. Yeah, you have a good valuation on the revenue, but it's also how you assure that revenue streams continue. Give you an example, like what you said. Between I sell the water cooler thing 6 a week. I only have 24 a month. I can manage with bookkeeping, which is just writing down who and stuff like that, right? But if I were to pivot to 6,000 a month by subscription, I can't handle that with a manual Excel spreadsheet, isn't it? So if I have a system, then I can track and then I can invoice. That means I've got revenue assurance. I don't have leakages. I forgot to invoice these people. Then I'm not collecting, etc., etc. That kind of stuff. So that is what digitalization is all about, right? Okay. Also, it's a case study that I've come across. Is the same thing. A particular machine can only give you a counter of the number of outputs, 1, 2, 3, 4, 5, but it cannot tell whether that output was a completed product or not, right? So then we don't know exactly how many actual sellable product has been generated by this machine. Yeah, so that's where you put in IR 4.2, 4.0 sensors to then distinguish between what is already
accepted and reject.
So that when we know exactly that this how many of the completed products widgets has been done versus the amount of inventory or components that went into it, so that prevents pilferage. It also gives you a very good costing in terms of your sales versus what you do. Okay, so those are practical things, not theory, but actual being used. And I've seen it before, and I've done that. And in my past life, I used to do what you used to do too. Okay, that's why it's nice to have a chat with this. Okay. Right. And one of those things here is that I'm able to translate it into a very layman, businessman point of view, which is some of these questions that come up. Okay, so anyway, we are just about 15 minutes left to the end of to 2 o'clock. I don't see any more questions coming through, so I think we can wrap up this session. And those that has more queries and more clarifications, you can contact Yip Ming and the Pro people, and so or through us, MICCI, and then we'll pass it through for you guys. But certainly, the last 2 years pandemic has shown that we have to pivot, we have to digitalize. It's no longer wait and see. I don't know. I think we have to start the journey anyway, really soon, right? Okay, Yip Ming, any parting words, takeaways before we end the session?
Okay, before I end today's my session, I really would love to see Malaysian SME especially SME to adopt digitalization and challenge our company, challenge ourselves to turn IT investment into a profit center from a cost center. We should rethink about digitalization as a cost to the company rather than it is an enabler for new business or to increase profitability or increase our revenue. So from cost center to profit center, from a cost to the company becomes a revenue generating and possibly new business that we can sell, new business or new product that we can sell to our client. Thank you.
All right, very good. It's about IT instead of a cost center, a profit center. This is something that which a lot of SMEs may not really understand. How can a cost center becomes a profit center? Give you an example of, again, MICCI. We invested very heavily in social media building the social media network, and then it becomes, instead of a cost, it is now a revenue generator, because we have a lot of members and new members leveraging on our social media platform to talk about their expertise. Exactly what Yip Ming now is talking about, in to say that you guys do have that competence and you need to contact CRON. I think in the beginning we gave you a QR code where you can scan and get in touch with them. Okay, right. So see you guys next round. Keep a watch out for the CRON Expert Hour again. We will have one not too far away. Have fun doing your business. Things are opening up. Cheer up. Or it's not that doom and gloom. Goodbye. See you guys.